Japan's SoftBank said it will pay $20.1 billion to buy a 70% stake in Sprint Nextel. In China, inflation slowed to 2% in September, a signal that there is more room for the government to stimulate the economy. I'm Lindsey Bell, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsey Bell with theStreet, and together we bring you the morning call. Last week, markets put in their worst week in 4 months, since June. But this morning, we've got a positive open here with the futures up on the back of some positive China data. How are you trading going into today, Scott?
I think most traders tried to pare down their positions going into the end of last week. Last Friday before, when we tried to break out and failed the day that the unemployment rate was billed at 7.8%, which I think everyone read through, that was a time to sell some stock. And then if you remember last Tuesday, when technology broke its 50-day moving average well ahead of the S&P, that was a time to be cautious. That was a time potentially to add to some shorts. And then on Friday, finally, the S&P used the 50-day as a magnet. I know for myself, that's where I covered my spider short, but I didn't flip long because I wasn't sure whether or not that would be a level that could be a pivot low, or do we have further downside. So today, coming in flat, I think a lot of traders are going to figure out whether they could fade this open or if we could hold the first 30 to 60 minutes for some follow through, as the day progresses.
What are the key levels you're watching, you've got your eye on today?
Well, it depends, again, if you're macro or micro, and if you look at the chart of the S&P, you will see, you look at the chart and there's really not much to worry about here, starting from the October 4th lows all the way up, hundreds of handles higher to the top here. Now, if you want to take a closer look, which is what I like to do, so you could see how to maneuver from a shorter term basis, which a lot of my guys do on an intermediate level. Here is a top on September 14th. Here was your double top like we spoke about on that jobs number. Okay, then we came lower, broke and closed below the 8 and 21 day. That was a sell signal. And then on Friday, we touched a 50-day, which usually you get some type of bounce off of. And if you want to draw another trend line, you want to go from the most recent low here. This is that June 4th low. I guess markets like bottoming on the 4th. You can come right into this area. So once again, this is why this was a pretty prudent area to cover some after a big move over 5 days. Now the question is, can I reclaim this area? This important resistance is about 1443. So 1438 to 1443 is an area that the bears would want to defend if they want to potentially get some lower prices. But if we start to take back this area, some bulls are going to have to get back in the market, and we're not going to see the lower prices to buy that dip. We might have to start paying up.
Well, one of the sectors that we saw some real weakness in on Friday was the financial sectors. Now, despite this, they still were one of the best groups for the week. But Wells Fargo and JP Morgan reported earnings, and they were good reports, but just not good enough to keep the stock market, the stocks going in that sector. Let's take a look at the XLF. It closed below its 21-day.
I think everyone wants to buy the financials. They're all like rooting for the financials because a lot of people do have them in their 401k and whatnot. And I just think that expectations were high. And we spoke about this so many times in the last 2 weeks, saying they're going to have to deliver like explosive reports in order to get further upside. So for them to trade off, not the end of the world. If you look at the chart of the XLF, you see here, this was the top on September 14th. Here is your lower high. Yes, we just gave back the 8 and 21 days so we could see some more choppy activity. I do think you could position in the XLF if you're not in them yet. I would say a little bit closer to 1550. I do think that this group could have a good year next year, maybe even towards the end of this year. So I would say to buy the dip, constructive wise, it should be able to hold above 1550.
JP Morgan reported, as I mentioned, earnings on Friday. That stock ran up 25% going into this report. The stock was down on Friday. It was a good report. The mortgage business was good. They saw expense control, which was nice. But the stock traded in a wide range on Friday. What does that tell you?
Well, I remember seeing it up 70 cents once the numbers came out, and then once people started looking at the loan loss reserve as a help for the beat, people started talking about shorting it. It went from up to negative, and that's also what helped the S&Ps itself fade on Friday. That's how you connect the dots as a trader. Overall, though, if you look at the chart at JP Morgan, I don't think it's game over here. I think you're going to see a bit more choppiness. So I would say short term, it would be very impressive to see JP Morgan hold above the 21-day, which is 41, but I don't even think it really has to hold that level. I would love to be a buyer of this closer to 40, and then we'll see some kind of channel develop here. And then at some point, I think we do get higher prices, but I think buying it closer to 40 might make a little bit more sense.
Wells Fargo also reported on Friday. I think investors with this one, they were disappointed in the net interest margins that were lower than expected. It's trading at a premium valuation, so without that blowout quarter, it pulled back about, I think, 3% on Friday.
Yep, but it also closed off the lows. So it showed that people weren't just running and abandoning ship. So I think at this point, this too is in the game. It's just going to need a little time to sift out. And if you look at the chart here, you will see that, you do have a nice gap from earnings. So, at this point, it's probably opening a little bit above this. I would say if it starts to get close to filling this gap, some people might, come in and try and fade it. But at this particular point, I think here's your new point of reference. As long as it stays above this 33.65, I do think we go sideways for a little while into this area. And then I think it gets its upward momentum with the banks. So at this point, I just think it's a little bit of an avoid, as there'll be better movement in other places, but don't lose sight of the banks because you probably want to buy it on the dip.
Right. Citigroup reported this morning, probably just recently, we haven't seen those numbers, but that stock was trading right near its 8-day. What do you think? What do you expect out of this report?
I think it's going to be a lot of the same. It could be up a little bit, down a little bit, but at this point, I think that there's just a lot's priced in. So I'm not going to talk about it right now. If you look at the chart here of quick levels, you could probably even go on your phone there and see what it's indicating. At this point, it did close on the 8-day. Here's a short-term top. It started to act frisky. Look at this one. This actually made new highs on this overall move. I remember talking about it right here when it traded above this wedge type formation. This gave you a nice trade. So Citigroup has been acting better. I think that the street's starting to look at this much more positive than it has been, but this particular time.
It's up 12 cents in the pre-market.
All right, so I guess it hasn't come out yet. But anyway, here's big support right around 33.97. There's your resistance, I would say. If it does open down, maybe like a Wells Fargo, that's buyable. If it opens up, it might be just a little hard to sustain such a move considering how far it's come.
Goldman Sachs also reports on Thursday. Again, probably going to be more the same, but this one's also run, though, going into the report. So it's going to have to be good, right? It's
going to have to be great.
Yeah.
And if you look at the chart of Goldman, this, too, has been a leading indicator for the banks. Lots of times to get involved with it. This was when it led the banks to the upside right there. Remember that date? That date was June 5th. The banks ran on June 6th. And then it topped on the 14th. It made a little bit of a higher high, which, with Citigroup was healthy. Down day because they got a little concerned when they saw that JP Morgan, Wells Fargo couldn't rally off those numbers. So at this point, here's your pivot. I would say if you're not going to hold Goldman Sachs into earnings and you've been riding this trend, with this up open, maybe sell some. Don't wait till the end of the day. And then tomorrow we'll see if it can get above 122.94 and sustain above it. You're going to see some shorts probably get squeezed. I'm going to go into the report flat and trade it after I see the number.
Well, we're going to take a quick commercial break and we're going to get into the trenches with more earnings reports.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back. We're going to take a look at some of the other earnings releases coming out this week that we've got our eye on. First up is IBM. This is actually a stock that Stephanie Link owns in the Action Alerts Plus portfolio. This is an interesting name because it has run recently. It's a good stock because about 55% of its revenues are recurring, which is nice. It's good in this type of economic uncertainty environment. Margins are expanding. Management recently upped guidance. So I think that there are high expectations going into this stock. What are the levels you're watching?
I think there's a very high expectations, and this is really good to watch because a lot of people are scared of IBM because of also their exposure to Europe and also their exposure to the public sector, besides the positives you just mentioned, and it's been on a run. You look over here at the chart of IBM, it's had a really nice move from the like here's the June lows, or it hit it in July, the lows. Here was your buyable price when it went through the downtrend, and now it's trying to hold above 205. It's off the highs, but it still has a lot priced in. And also, if you take a look at this monthly chart, look at IBM. It's had an enormous move to the upside where, the stocks that it used to hang out with back in the day, they're not doing so well. Look at Intel, has done nothing. Microsoft, nothing. Hewlett Packard, disaster. So if you look at IBM, that's had a really, really nice run. I hope that it continues. I hope that the institutions that stay behind it show that you could be a stock picker. But right now, as far as your levels are concerned, here you go. 204 is support, and then the recent highs here is about 211, 89. I will not be taking this into earnings, nor will I be taking options. But I think if you're trading it for an intermediate move, I would definitely, be flat going into the numbers because it's going to take a lot for it to make new highs.
Coke is reporting earnings tomorrow. This stock is one that Stephanie Link just recently bought because it popped up on a radar because it was so oversold and it was trading at a discount to its historical valuation. This is a good, solid, long-term growth story. They're taking share from Pepsi. They're working on efficiency within the company. So she likes this name, but it's been in an ascending channel. Do you think that's going to resolve soon?
It's going to resolve after earnings. And if you look at the chart here, there was a way to exit this even though it's Coca-Cola. When it broke right here, this was a spot where I think some guys even got short. This is a trend that was intact for a while that it broke. Then it became oversold. It's worked off a bit of that. I would say expectations are not high here for Coca-Cola. So if they do come out with a beat and they talk positively at all, I think if it gets above, 38.83 or 39, you could see upside movement. But if it misses, it's not quite on the lows, I think you can get a move back down and it could test a 200 day. I think expectations looking at this chart are not high. So a beat gets it to the upside and a miss gets it to the downside. And then I think if it's just in line, you're just going to see some more choppiness and it's just going to take more time.
Then we get Pepsi on Wednesday, and I think expectations for that are pretty low as well. What are you seeing in the chart?
Yeah, this one too. If you take a look right here, you'll see that it's not at highs. It's also not at lows though. So, it hasn't been decimated. I think that this too technically is below the moving averages. If you look at the chart like this, some would say that this is a bit of a distribution pattern. Here's your left shoulder, here's your head, here's a little bit of a right shoulder, just broke below. It's below, I'd say technically this doesn't look great. So this isn't expecting much either. But either was Yum. You look at Yum before it came out, wasn't expecting much, was a choppy mess. As I have it up, let me just take a quick look at it for you. We talk about earnings gaps. Right now it's just sideways. This is why you never chase after earnings. It's starting to build a little bit of a base. I would say keep watching this, and as long as it holds above, this 69 area, continue to be long. And if it breaks below and does, a gap fill, then it loses its luster. But I think at some point it does some type of reversal type pattern for a tier 1, and then when the market's healthier, that's your add for momentum. So that just shows you don't need to take it into earnings or by the day of earnings, wait for it to figure out. And sorry, I went off track there. You go back to Pepsi right there. It's looking more negative. So if the results are good, I think shorts get squeezed. But right now the chart's showing me that they might not be so bad. They might not be so good.
Yeah.
Yes. Street's not expecting much out of these multinationals anyway.
No, not at all. American Express, they're going to report on Wednesday. This stock has been trading in a narrow range since June. What's it going to take for these guys to bust out to the upside?
It's going to take a good report. And I like narrow ranges because narrow ranges at least gives you points of reference to trade against. So if it's good, you know where to buy above and whether it holds above, and if it's bad, below. So if you're a macro investor, you really haven't had to take much pain in the Amex. This stock has done very well over time. MasterCard and Visa has been best in breed, but Amex hasn't been too shabby. And if you look here, you will see that this is the tight range that you're talking about. Very, very tight coming into an apex. So we've defined resistance up here at about 59.37. So a good report. You open up over 59, perhaps it can go. The highs are right there. If it's not good because the consumer has been tightening their wallet or whatnot, it starts breaking below this area, below this trend line of 56.15. You could see a move to the 200 day. So all in all, a lot of these look very similar because there's a lot of question marks in earnings. The question mark that you have to answer is, are you a macro investor? Have you been sitting in it just this entire time, which has been an unbelievable move? This is showing relative strength. Amex has been rewarding stock pickers. It's holding higher right here. So I think if you are a macro investor, it's not giving you any real reason to get away from this stock. It looks really good from that level.
KeyBank reports earnings on Thursday. Yes, of course, net interest margins are going to be a concern going into that report. The stock put an ugly candle in on Friday, but this is another name that Stephanie Link likes. She likes it for the restructuring. It's part of its kind of a housing play too, but we should see some good commercial and industrial loan growth from these guys in this quarter as well. What is the chart telling you though with that move on Friday?
Well, I guess some people got scared. If Wells Fargo can't go up and JP Morgan can't go up, perhaps this gets sold too. So I think some fast money left. But the fast money doesn't control the stocks; it just rides them. So if you look here at the chart, you will see, it did break down. So there is some concern. People like, oh my goodness, they sold off J.P. Morgan Wells. Maybe we can't own Key. It's below the moving averages. I don't really know this stock that well. I would say I would. Let Stephanie give her opinion on it. But technically, I don't take stocks into earnings anyway, typically, so I'm not going to take this one. You want to go to the monthly chart. Look at this. It's on a monthly basis. It hasn't rewarded investors. It's in this lower channel. It doesn't look good, but it does look like if things turn around above this $10, there you go. Next year, you can get it moved to 17. So if the banks typically want to have another good year, these regionals on a monthly basis can go, and this one that has exposure to a lot of the mortgages might be in the game for that, considering that housing has been the bright spot.
Right. Let's do some quick hits. We'll kick it off with Apple. Why not? We like that name. What are you seeing in the chart? How are you trading it now?
Right now, it's been a two-way street. Guys are making money long, guys are making money short. If you want it to be net on the position, ever since it broke the 21-day, it's been better to be short than long. If you look at the chart, the anatomy of the trade almost blares at you. This was the day that it changed. This is the day that it broke below 683. This is when it sliced and closed below the 21-day. Here was a little bit of a bounce. There was your bounce off the 50-day just to get sold. Here's where you close below the 50-day for guys to get short. Here was your first bounce off the 100-day. Look at that, 3 days, almost just like this. And now it's trying to hold the 100-day. Now it's a short term, guys are probably going to be seeing how it handles 635. If it can get above 635, you have the moving average at 639, and then you have 645. So I think at this point, as an intermediate term trader, I don't think anyone's marrying this thing right now. We're just trading it. But overall, now people are trading it against this 623.5. So here's your new box for Apple, and it should be in this box, I would think, going into earnings, and that's when we'll make another decision here.
Let's take a look at Google, because that stock has had an amazing run, and they're going to report earnings on Thursday. So what are you keeping your eye on?
It depends on your time frame. Macro investors, I still think that this stock, whether it's the fourth quarter or next year, you're going to see 800 plus. The monthly charts look awesome. Short term, if you got involved after last quarter's earnings around 620 or 645 or 670, you've had a hell of a run. So the question is, do you take it into earnings? And if you're not, you have between now and Thursday to pare down your position. And if you look at the short-term chart right now, what I don't like is I don't like the fact that everyone's starting to upgrade it now. Okay, and basically this is when the upgrades came in. On this day and this day, and we closed below every level we were at before the upgrades. So most high beta stocks have all given up their 821s and their 50s and hit their 100s. So Google right now is a bit extended. So I feel like it still could hit the 50-day and still be very, very strong. I don't think it happens before numbers. So I would say right now it's up $3. If you've been riding this trend since it broke above this area, again, we just showed you that trend, I would take some off. If you're looking to trade it, post earnings, we'll have some levels in place. I don't think we need to talk about that yet, but here's your short-term pivot. You have 738.29, which is the 21-day. It hasn't broken the 21-day since earnings. So that to me will be a little bit of a composure change. They want to shake things up. This was the last time I touched the 21-day. Did it again. This time if it breaks it, I think it gets a little bit pressured, but we'll see what happens between now and Thursday.
Microsoft also reports on Thursday, and people are watching to see which way it's going to go. It's been trading in a tight range.
This stock has been, just a sell like most of the PC sector. Dell, Intel, HPQ. But again, sometimes you get the treasures for trash trade, meaning if someone held on to this thing too long and didn't see sell signals, it goes in their garbage bin. But if it's oversold enough and someone's not involved, it could turn into someone's treasure because of where it is. So if you look at the chart of Microsoft now, you will see that, do you guys remember this outside day? I remember actually trying to be long this thing, for this breakout, and then all of a sudden, boom, here was your small outside day, so I sold it there, and I haven't even looked at it since. And since, look at this, all the way into Friday. But then what did you see on Friday? You saw a little bit of a divergence, right? Here you go, green day when Qs were negative, spiders were negative. So I don't think you get much here. I don't think this is very exciting. I don't even like the technicals here. Maybe it could bounce up into the 30 to 39 area, but I don't think it's compelling here. There's better things to own.
How about gold and silver?
Gold and silver. Okay, let's go quickly into gold. Gold and silver both had really nice moves since since August 21st, and they've been holding higher, but they've been just sitting there and sitting there. So you have to measure your commitment. 2 days ago, both gold and silver had a small outside day. Not a blaring one, but if you watch things closely in your tactical, you would have seen it. So you go to the chart of gold. Let me show you what I'm talking about. Okay, right here on this day, okay, let's take a look. This is when it opened up and closed below the 8-day moving average. Okay, so right there, a little bit of a faulty signal, not a huge one, but also the market was under pressure. So you put 1 + 1 together, it's fine. And then I think it opened normal. And once it traded below 171.13, that was also an exit sign since it traded through the previous day's low. And then it closed in the low, so another reason after engulfing a lot of this range to maybe sell some. So now here we are. You go to points of reference. Here's one coming in right there. There's your 50-day all the way down right here, which fills a gap. And then if you want to put some retracements on the map here, which I'll do for you just to show you how these things have had such a big move, if you want to look to see where you potentially could buy the dip and see if this move is valid, which I think it is, it just needs some time. You go right like this, and you will see that your Fibonacci retracement for GLD right here, the 0.38%, comes in right below this point of reference, comes in right around 167.82. So if you are short, this 168 area is probably a spot to cover, and if you're looking to test along because you sold into this strength after a huge move, this is a nice spot, and here's your 50 right around 165.82. Do the same thing for silver. I'm not going to do it for you.
Yeah, all right. Well, that's all we have time for anyway. But be sure to check in at the end of the day for the daily recap from Scott and the T3 Live team.